I'm Andrew and you're you, and welcome back to the channel. Credit cards can be a great tool for building credit, but they can also be a dangerous trap if you don't know what you're doing. Stay tuned and I'll explain the 5 credit card red flags to avoid on this edition of Easy Money. The goal of any company, especially a credit card company, is to make as much money as possible. Credit card companies do this by collecting interest and fees. They are purposefully designed to be difficult to navigate, manage, and understand. And they make it easy for you to spend and rack up the balance, which in turn makes them more money. But they're also great tools that can build your credit and earn you great rewards if you know how to avoid the pitfalls. Choosing the right credit card can be a daunting and difficult task. As of the filming of this video, there are more than 1.12 billion credit cards in existence. Only half of those come from the 4 major credit card networks: Visa, MasterCard, American Express, and Discover. That's a lot of options. So let's get started giving you the 5 red flags to avoid. Excessive fees. When you're just starting out, you may not be able to avoid an annual fee. And when you have a lot of money, the benefits of the card might warrant an annual fee. With that said, the annual cost of holding onto that card shouldn't be excessive. There are a lot of options for those with poor or thin credit that offer relatively low annual fees, $50 or less. But annual fees are not the only costs that can occur. There are many so-called fee harvester cards. These cards feature charges that can sneak up on unknowing customers. These could include things like the application fee, activation and processing fees, monthly maintenance fees, membership charges. These fees are often unnecessary and very avoidable. Be aware that they are common on some unsecured cards for bad credit, meaning cards that don't require a security deposit as collateral. And before deciding on a card, be sure to read its terms and conditions so that you're aware of what fees you may face. Exorbitant interest rates. The easiest way to nullify any interest rate on any card that you might carry is to pay off your balance each and every month. Regardless of the card you get, this is a great way to build your credit and avoid all interest charges. So whether the card has an 8% interest or 45% interest, it really wouldn't matter. Unfortunately, no one is perfect and life happens. We can all fall onto financial hardships that may cause us to carry a little bit of debt. In this case, it could be very expensive. As of November 2020, the average interest rate on a credit card was 16.28%, according to the Federal Reserve. In general, the rate you're charged will depend on your creditworthiness. Your creditworthiness or your credit score indicates to the card issuer the amount of risk that they're taking by extending you credit. When shopping for a credit card, be aware of the interest rate. Do your best to stay as low as possible. Anything over 18% is crazy high and should be avoided. If you're unable to secure credit or don't have a great credit score, consider obtaining a secured credit card. These require you to make a refundable security deposit that will act as your credit limit as well as your collateral. They can often be easier to get because the bank is taking less of a risk on you. And secured cards typically have lower interest rates as well. Low credit limits. Many of the starter and unsecured cards will advertise a credit limit range. The limit you qualify for will depend on your credit score. Lower credit limits can have implications for your credit utilization ratio, or the amount of credit you have available versus the amount of credit that you're using. For example, if you had a card with a $500 credit limit and had a balance of $250, that would be a utilization ratio of 50%. On the other hand, if you had a $5,000 credit limit with a balance of $250 on it, you'd only have a utilization ratio of 5%. Same amount of debt, but a much lower ratio. A typical recommendation is to maintain your utilization ratio below 30%. In general, the lower the ratio, the higher the credit score. It's good to note that some credit cards advertise the possible increase of your credit limit as you use the card responsibly. And if a card asks if you want your limit increased, just say yes. Partial credit reporting. If you are building your credit, you'll want to be sure that the card you choose is reporting to all 3 major credit bureaus. That's Equifax, Experian, and TransUnion. These three companies maintain your credit history and compile reports that come up with what is your credit score. If you're using a card that doesn't report to all three bureaus, this could be problematic because you won't necessarily know where future lenders might be pulling your credit from. So if a future lender pulls a report from TransUnion and your card's only reporting to Equifax and Experian, then it will be as if you have no credit history at all. So be sure your information is being reported to all three credit bureaus. No way to upgrade. If you're using a secured card or a starter card responsibly, this can strengthen your credit and open up more options for you. At this point, you may be looking to transition to a credit card with better terms, bigger rewards, or more perks. So keep this in mind when making your decision on your first card. It's preferable if your existing card makes that an easy process for you. The best secured cards for poor or thin credit will typically offer upgrade paths, some automatically once you've hit certain thresholds. Others you'll have to put into place. And if your account is in good standing when that happens, you'll typically get your deposit back. Credit cards, like so many other things, can be a damaging weapon or a useful tool. When you yield a credit card in the right way, it's a powerful tool. Be sure to educate yourself before you sign up for a credit card. Make sure that you read all of the terms and conditions. Understand the pitfalls and red flags and make the best decision for yourself and your financial future. I'm always glad to have you along on this journey. Make sure that you tap that like button and subscribe to ensure you're always getting that easy money. I'm Andrew, this is Easy Money, and now it's time to invest in yourself.